Fed Chair Jerome Powell gives the signal that quantitative tightening is over and rate cuts are coming very soon. This means we're going back to easy money and it's risk on, folks. So we can expect crypto and stocks to start pumping. I'm going to break down some charts for you. And the SEC takes a major loss in their lawsuit against Kraken Exchange. This is significant. And Sony, the tech giant, is looking to launch a Ethereum Layer 2. We're going to break this down and much more. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as a thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, the big news of the day, as I'm sure many of you saw, that Jerome Powell, the chair of the Fed, announced at Jackson Hole, Wyoming, that the time has come for the Fed to begin reducing interest rates. And we knew this was coming, but it's official, right? We got it straight from the horse's mouth. And of course, many folks are anticipating the first cut to come in September. So what does this mean for markets, guys? Well, right now, Bitcoin is pumping off that news. It is over $64,000. Nice green candle on the daily chart. And the DXY, the dollar currency index, is crashing hard. It is at 100 right now, just red candles after red candles. And that's what we want to see, because when the DXY is crashing, guys, there's an inverse correlation where risk assets like Bitcoin and altcoins are pumping. So that's an ideal situation for the continuation of the bull market and for us to see parabolic moves. Now, if you read my email newsletter today, I shared a great chart where I showed that when the DXY falls below 100, it's completely risk on, folks. And that means we're going to see a lot of capital come into the crypto asset class as well as the stock market. And one of the things Nate Geraci and I spoke about in our recent interview is that a lot of money is going to leave money market funds, which was generating a lot of high yield or interest because the rates were so high. But if the rates are getting cut, you're not going to make as much. So people are now going to move a lot of those funds into risk assets like Bitcoin, crypto, and the stock market. And people will see this as a bullish sign. So the market sentiment and psychology is going to change because we're now headed to the next boom cycle. We have officially ended the quantitative tightening cycle where they are raising rates and the Fed is selling many of their securities holdings. Now rates will fall. It will be easier for businesses to borrow money, hedge funds, and everybody in the business cycle will do really well. And people will now look to invest. So there's a whole market psychology to this, right? That rate cuts are coming down. It's easier to get a mortgage, all that stuff. You guys understand the economics of it. So we are at the cusp of entering the risk on era, guys, again. And we've seen these boom and bust cycles throughout the history of the economy. So we're coming out of the bust, which was 2022, a bit into 2023, and entering into the next long-term boom cycle. So that's very bullish overall. So you may say, why are you saying we're at the cusp, Tony? Isn't it done? Well, not yet, folks. And when you look at this Bitcoin chart, Bitcoin could retest lows again before we have the bounce and keep going higher. I'm not saying I want that to happen. I'm not saying that will happen. I'm saying it's a probability. As informed, educated investors, we want to leave our emotions at the door and be prepared for different scenarios, because Bitcoin could test the lows again, go back down to 50K. Who knows? It may not. This may be the move that takes us up. It's not going to go in a straight line. It's going to be, kind of a staircase, right? You're stepping upwards. You're pumping, pull back a bit, build support levels, pump again, pull back, build support levels, higher highs, higher lows. You guys know the deal. So that's what I'm anticipating. And I believe the markets will really start to rally significantly come the second half of September when that rate cut actually happens. And seasonality wise, we've seen that October into November, December, Q4, there is a significant rally for Bitcoin. The question is, will we see the blow off top by the end of this year, or will this bleed into next year? There will be a blow off top. So right now, as I stated in my newsletter, I'm going to be preparing to cash out, have my numbers and all my price targets, set up accordingly for both crypto and the stock market. So that's how I'm viewing this. I hope you understand. As mentioned, check out my newsletter today. It's free to sign up. It's all free, guys. You don't have to pay anything. So I am very bullish, guys. I am very, very bullish. We got the macro signal from the Fed that QT is done. The tightening cycle is done. We're now entering to easy money. We know what that means, lower rates, more money printing and all that. One of the things we've been tracking over the past month, guys, given the Japanese yen trade and the markets pull back significantly, is the stablecoin volume and minting. We saw Tether just this month minted 2 billion USDT, and USDC issued by Circle, they issued hundreds of millions of USDC, and today 50 million was minted. This is very important because where are these stablecoins going to go? People are not minting it for fun. This is going to go into the crypto asset class. So notice we're looking at the charts, we're looking at the macro, we're looking at different factors like these things, the stablecoin supply and so forth, not just for USDC and not just for USDT, but both. So guys, I'm seeing some very bullish signals here. Very exciting times. I hope you are as bullish as I am. Now, we got news here that Sony, the tech giant, they are teasing the launch of an Ethereum Layer 2 blockchain with Startale Labs. Folks, it's amazing. You have the biggest companies in the world, whether they're in the tech sector, the finance sector, whatever, they are adopting crypto. They're building with it. They're launching financial products. We've crossed the chasm. It's amazing who's here. I am still waiting for Michael Dell to tweet out, Dell has officially added Bitcoin to their balance sheet. I've been sharing this with you guys for months now because Michael Dell has been tweeting about Bitcoin. And it's amazing to see these legacy companies do this. It's very bullish. So global conglomerate Sony Group's joint blockchain venture with Startale announced the development of Sonium, if I'm saying that right, Soneium, its first Ethereum Layer 2 blockchain that focuses on scalability and user-friendliness with an aim for mainstream adoption. Sonium, upon launch, plans to deliver Web3 apps across a multitude of fields, including entertainment, gaming, and finance, leveraging Sony's global Web2 presence. Sony Block Solutions Labs in a statement. Sony Group has strong distribution channels in multiple industries and existing users in our daily lives. Soda Watanabe, founder of ETH Network and director of Sony Block Solution Labs, said in the press release, through Sonium, we will make something people want to go mainstream beyond Web3. Now, I don't know if this is going to have a token. They don't mention that here, but this is nevertheless bullish. It's going to be built on, it's going to be a layer 2 to Ethereum. So if you hold the ETH token, this is going to benefit you, of course. And I'll try to get more details here. The other thing that Sony is working on, it was reported, is that they're preparing to launch a local cryptocurrency trading platform in Japan. Guys, I hope you are as bullish as I am. I am seeing incredible things happening here in this market. Now, here's a quick word from our sponsor. Check it out. This content is brought to you by TrustBet, which is a fully licensed Web 3.0 Solana DAO online casino and sports betting platform. TrustBet is revolutionizing the iGaming industry, and you can earn and receive daily passive staking income from a licensed and regulated global casino and betting platform, no matter the market conditions. The problem that TrustBet is trying to solve is that in the online gambling and casino industry, there are economic and operational problems, particularly the extremely high compensation of the C-suite executives running the companies in the sector and frequent non-payment of winnings to customers. The solution that TrustBet is suggesting is to integrate DAOs into online gaming that could fundamentally shift the business model, offering more balance and collective ownership compared to the traditional publicly listed companies. This shift would address issues like disproportionate compensations and unfair dividend distribution. TrustBet has a token called TBET, TBET, and it has now moved into phase 2 of its pre-sale, resulting in a price rise from 10 cents to 12 cents for each TBET token sold. Now you can check out TrustBet's Twitter profile or X profile and their Telegram channel to learn more. They got a lot of big updates coming out here. For example, they announced that they're rolling out their first NFT airdrop this coming weekend. So you can learn a lot by going to trustbetonchain.com. Link will be in the description, and be part of the revolution in the iGaming industry. All right, folks, on to the next news item. Russia to launch 2 crypto exchanges and stablecoins linked to the Yuan and the BRICS currency. This is coming from Commersant. So We are seeing the global adoption of crypto, whether you love or hate Russia or, all these different things. The point is, I'm not trying to endorse any type of country. I'm just stating the facts of adoption, who's building, who's launching, and what they're doing. And we know Russia is trying to bypass sanctions by using specific stable coins. They've even legalized crypto for cross-border payments. So something very interesting is cooking up here, guys. But this speaks to where we're headed, and that is a world running on blockchain, whether it's currencies on the blockchain, tokenized assets, and much more. Everyone is joining the party in one fashion or the other. And it's amazing to see that Russia is doing these things. And once again, the politics of Russia and Ukraine, that's an entirely different situation. But big things are happening globally, and global superpowers are making big moves. It's pretty incredible. Now, we got some big updates around the SEC lawsuit against Kraken Exchange. We know the SEC, led by scumbag regulator Gary Gensler, has been targeting Coinbase, Kraken, Robinhood, and much more. And Kraken's been fighting back, which is what we want to see. The industry's punching back. So we got news here that their motion to dismiss in the US SEC case was denied. But this headline is a bit deceiving. Let me give you the details. There's actually a big win for Kraken here in the crypto industry. So Marco Santori, who's the chief legal officer at Kraken, said today the federal court for the Northern District of California ruled as a matter of law that none of the tokens trading on Kraken are securities. So folks, that is huge. It is a stark contrast to what Gary Gensler is trying to peddle, that all these things are securities, right? And they throw a bunch of tokens in these lawsuits. They don't litigate and give each of those tokens due process. So this is a significant win for Kraken, for the principle of clarity, and for crypto users everywhere. It also confirms Kraken's long-standing position that it does not list securities. Furthermore, the court found the SEC's self-serving invention of the crypto asset security concept to be unclear at best and confusing at worst. The court called out the SEC's strawman tactics too, wondering aloud on the record why the SEC consistently mischaracterizes Kraken's position as requiring a written contract for there to be a security. Want to guess why? Because Gary Gensler is a scumbag. He will lie in the courts. The SEC got subpoenaed in the debt box case. They got called arbitrary and capricious in the grayscale case. So what can we expect, right? Gary's going to do anything. He'll break the law just to get his way. Here, Marco continues, yet the court still permitted the case to proceed to discovery. How? Read on. Fundamentally, the court in Kraken's case made the same distinction as in the Ripple case. A token isn't a security, but arguments around a token could be. So as Judge Torres ruled, right? The token itself intrinsically is not a security, just like the orange groves or the oranges and the Howey test were not securities. Rather, it was how Howey packaged them. So it depends on the facts and circumstances. But the SEC likes to have it both ways. They like to throw out facts and circumstances. But we know that the token, just creating a token itself, that is not a security. But how is it offered? What's the scheme around it, right? So the SEC unqualifiedly lost on this tokens are securities theory and will not be permitted to rely on it going forward. That is huge, folks. Instead, it will need to prove for every alleged transaction on Kraken that the Howey test factors are satisfied. Now, a bunch of different people weighed in. I want to share what James Murphy, Meta Law Man, had to say because he absolutely gets this from a legal perspective. He says, to put the case in proper context, remember there are no allegations that Kraken defrauded anyone. So this is not a fraud case, guys. The crux of the case is the SEC alleges that the 11 crypto tokens are traded as investment contracts, i.e. securities. This includes Cardano, Algorand, Atom, Filecoin, Flow, ICP, Mana, Matic, Near, OMG, and Solana. He says, as I read the opinion, I sympathize with the judge as he had to sift through a lot of conflicting crypto case law that is being developed as a consequence of the SEC's scattered regulation by enforcement approach. Interestingly, the judge specifically aligned himself with the reasoning of Judge Torres in the Ripple case on a number of points. The judge rejected the major questions doctrine defense, quoting another case. He wrote, the cryptocurrency industry falls far short of being a portion of the American economy bearing vast economic and political significance. That's interesting, James says. I wonder whether he noticed the recent headlines declaring that the crypto industry is the single largest political contributor in the land. Ultimately, the judge concluded that the binding Ninth Circuit case left him with little choice but to allow the case to move forward at this point. James says winning a motion to dismiss at the onset of a case is hard. So it's not a big deal that the judge is letting this move to discovery and going on, right? That happened in the Ripple case and so forth. This means the case will move on to discovery directed at the question of whether the 11 tokens in the case are traded as investment contracts. This discovery and potential trial will happen without the presence of the 11 token issuers as parties in the case. So this is what I've been talking about, guys. See, SEC, just throw a bunch of tokens in, not litigating each of those tokens, not giving them the legal due process. That is a scumbag move. James says, my overall impression is that the judge felt that the SEC did satisfy the requirements of Howey at this early stage, but he is not necessarily convinced that the SEC will ultimately be able to prove sufficient facts to show that these tokens actually traded as investment contracts on Kraken. So this is very similar to the Ripple case. XRP intrinsically not a security. XRP traded on secondary markets on exchanges, not security. But they said that the institutional sales, which involve the contract, are securities. So facts and circumstances, Gary Gensler getting exposed. And this is why we got to keep fighting. This is why the industry is punching back, as they see weakness, they see lies, they see unlawful activities. We know Gary's doing this because he's doing the bidding of Elizabeth Warren, who's doing the bidding of TradFi incumbents who want to kill these crypto startups, these exchanges, so they can come in and take over, right? I've often talked about how can two things be happening in parallel? Crypto startups getting lawsuits, Wells notices, while BlackRock, Franklin Templeton, Fidelity, and all these guys are tokenizing, are launching ETFs and much more, right? How can these two things be happening in parallel? Because the incumbents made the phone call to the Goldman Sachs guy who's at the SEC, and that is Gary Gensler. If you don't believe that, if you think that's a conspiracy theory, then you don't know how the world works. You don't know about the revolving door of Wall Street and Washington, D.C. Just go look it up. It's there. Gary's an example. Look at Hank Paulson. There's many examples, guys. And it really sucks that these things happen, but this is why we got to hold our government accountable. We got to share the facts, call up our representatives, and much more. But one thing's for sure, crypto's here to stay. Crypto's winning. Gary will be kicked out. And the SEC is on the losing side of history here with Gary Gensler. So they may put up roadblocks and try to slow us down, but we're ultimately going to win. We're getting the major victories in the courts, guys. Now it's costly. These exchanges have to pay a lot of money. But I think, like I said, the industry is now going on the offensive. Not only are they countersuing and fighting back, they are proactively launching lawsuits against the SEC, even if the SEC is not engaging with them. There's a lot of that happening. So I'm sure the legal department at the SEC, their heads are spinning a bit here, and an entire industry is ready to fight back. So this is a big update here for the entire crypto market, and that the judge is saying, hey, these are not securities as is. So that's a big loss for Gary. All right, guys, that's the news. Let me know what you think. Leave your thoughts and comments below. Don't forget to sign up for my free email newsletter on Substack. Link will be in the description. Also, please grab a copy of my book, Rethinking Crypto. It would be a great way to support the podcast, guys. It's available in digital and paperback on Amazon, also available on barnesandnobles.com. It covers crypto's past, present, and future. Grab a copy for yourself. Grab a copy for your friends and family who want to learn about crypto. It would make a great gift. It provides investing tips and much more. And if you've bought a copy already, please leave a 5-star rating and review. It will really help me out. Thank you, guys. Links will be in the description. I appreciate you all. Thank you so much. And I'll talk to you all later.